Good evening, guys. Welcome back to Charles Surgeon's daily recap. Today we're going to be doing the recap for Wednesday, the 30th of October. It was a Euro USD trade. We were looking at the buy and we were taken out, unfortunately. So, in today's recap, we're going to go over, first of all, why I framed the buys for a buy, and secondly, why did we get stopped out. And as you can see right in front of you, the setup is still here. After we got stopped out, the setup went into this inversion and then went straight for TP. So I'm going to first go over the top-down analysis before I show you why we got stopped out. Okay, so on the daily, we know that previous day low was taken on Tuesday. It took out Monday's low, and from there we could confirm that we were pushing higher prices. Tuesday we did push higher prices. We caught the GBP USD setup. Because GBP USD and Euro USD are correlated, they sort of move the same way. And then on Wednesday here, because I knew there was this large rejection on Tuesday, this indicated that the market did not want to go lower and that we would seek to price higher. So I went to the weekly time frame actually, and then I marked out this fair value gap here and this fair value gap here. And I knew that if the market wanted to go higher, remember as I mentioned in the first recap of the 28th, I said that we should look for points in which the market would be willing to go to. It doesn't necessarily have to go there, but it would be willing to go there. And on the weekly, we figured that this is a fair value gap right here that the market was interested in going to, and evidently, as we can see, the market has reached that point. So now when I entered the 4 hours, I then realized over here on the 4 hour that we had that previous day low taken. We had over here the break of structure. You see here, after the previous low was taken, we seek price to close above this high, and then we know for a fact that the market has shifted structure to become bullish. And now that happened at 1 o'clock in the morning. That gave me the confirmation that we are bullish and that we would seek a retracement into a certain PD array. So now the first reason why I failed to deliver a successful setup is because, as we can see here on the 4 hour, I overlooked something. Let me just remove this inversion. If you see here, here is a low, and that low then gets taken out in order for price to enter this fair value gap. You see, because I saw price enter the fair value gap the first time over here, I thought that it was liquidated. But that was obviously not enough. And especially like I mentioned the last time, this happened around 2100 hours, which is like 9 o'clock New York time. If we look at our time, that would be around, let me just get our time here. If we look at our time, that would be around 3 o'clock in the morning. So now we know that banks don't operate at that time. So even though this liquidity was taken here in this fair value gap, we should have not considered it to be valid because the banks were not involved. And here we can see around bank hours between 8 o'clock in the morning South African time, and I think it's 6 o'clock. That's when the bank is operating. And here at 11 o'clock we see it take out that liquidity and then aim for that fair value gap once more. And then from there it started framing its upward bias. Now let me put back the inversion, and then we move on to the 1 hour. Now on the 1 hour, here was a clear depiction of an inversion fair value gap over here. Let me take it away so you can see it. So you see there to there, an inversion fair value gap that was taken out. You see it needs to do a full close. So then it did its full close above the inversion over here. Let me put that back, and then it came back here. So the reason why I ignored the inversion at first is because I saw price tap into it here. But again, like I mentioned, the error was because this was not a time at which the banks operated. This is at midnight South African time. The banks only open at 8 o'clock, right? The banks only open at 8 o'clock, and we saw this at midnight. So that means that it was not significant at the time. It was not significant that this swing went into the inversion fair value gap. But during the bank hours, which we see here at 8 o'clock, price revisits the inversion fair value gap. This is the valid entry for the inversion fair value gap. So if we were wise enough, or if I was wise enough, I would have anticipated price to return and take out this low, because it was not a bank low, so it was not a intermediate term low that could have been protected by the bank. And price therefore takes out this low during bank hours into the inversion fair value gap and then frames the buy setup. So now, when I was looking at the 15-minute to refine the entry, I stumbled upon this mitigation block over here. And looking back on it now, this was not a valid mitigation block, but it could have at least been still a valid order block. From here to here, we still had a valid order block. Now, the reason why this order block failed is because we had this higher time frame liquidity over here. This is a 15-minute order block, but this is a 1 hour fair value gap. And the higher the PD array is on the time frame, the more important it is. So a 1 hour fair value gap matters more than a 15-minute fair value gap, simply because the higher the time frame, the more important, because the banks work with higher time frames. So with that in mind, we understood that we failed over here. So we can clearly see that the market did react to it a little bit, but only to continue its intended move towards the inversion fair value gap. And then if we were to frame up our setup from the inversion fair value gap, it would look something like this. Over here to the end of the inversion, and then aiming for that TP. So that was TP1 right there. We would have hit a 1:5, and then TP2 we would have hit a 1:7. So the main error here, it didn't hit TP yet, but as you can see, the draw on liquidity was perfect, which means we were able to identify where price wanted to go. But where we failed was to see where price needs to go to first before it goes to where it wants to go. Like I was explaining to someone else, I said there's 3 phases to the market. The market is like wanting to go to Paris. So you want to go to Paris, and that is your higher time frame point of interest. But you are currently in South Africa, let's say maybe somewhere here. But you need to get some things ready before you can go to Paris. So in order to go to Paris, you probably need to book a flight. And your flight might be booked at the Cape Town International Airport, which would be this inversion fair value gap, you see. So you first need to get to the Cape Town Airport before you can fly to Paris. So if you do not properly identify where Cape Town Airport is, and you probably go to the local airport, probably say the nearest airport to your residence, which is probably here where we framed our entry, you would have taken the wrong flight, and then boom, you would have ended up, the flight would have probably taken you to freaking Cape Town Airport right there, one stop loss, whatever. And then, but if you took the correct flight, which is you were able to identify Cape Town Airport and go there, and then you would take the correct flight to Paris. I know the analogy is a bit weird, but if you let it sit in, then you'll understand it. I mean, I explained it like that to one of my friends, and they seem to understand it pretty well. So the key over here is to understand where price wants to go to, and where price needs to go to first in order to catch a flight to where it wants to go to. You understand? So the other important thing that we need to add on is also the time in which it wants to catch its flight. If your flight is set for 8 o'clock in the morning and you pull up to the airport at midnight, that doesn't mean that the plane that you take at midnight is your plane. You will probably take a plane that is going towards another destination, you see, like right here, and then the plane will probably go back to Cape Town, and you'll realize that you have wasted a plane ticket to go here and here, getting stopped out, which is a waste of money, and then you have to buy another ticket here to finally go to Paris. So you would have taken 2 trips, which means that over here to here you would have taken a stop loss, and then you had to take here to eventually TP. I know these examples are quite weird, just bear with me and try to understand it or watch it like a second time because if you understand this concept of where price is, where it needs to go first before where it wants to go, you can perfectly understand the proper time and place to enter a trade. So that is it for today's session recap. I really hope that it's helped someone, and I believe that by going through what you've done wrong and what you've done right, you can properly define your edge and see where you lack. And clearly, in today, we just lacked paying attention to the time. Most likely, it was my fault, probably running after money, wanting to seek a trade, because I personally get frustrated when my trades don't trigger within 8 o'clock or 9 o'clock South African time. So then I start getting anxious. So I think it was that same anxiety that caused me to overlook this inversion fair value gap and the time at which it was visited, which resulted in our loss. So to the group, to the WhatsApp group, I apologize. And I believe that you can also learn from this recap and benefit, and therefore make better trading choices. For the rest, I'll catch you guys tomorrow. Peace out.